back with Markets at Lunch right here on ET Now. Let's quickly tell you what the globe is up to currently. In Asian markets, they've opened firm, but gains were limited by further evidence of slowing global growth, while the bleaker economic outlook kept hopes alive that authorities around the world will embark on more stimulus measures.
Look at European markets. European markets edge lower following weak cues from Asia, hurt by further signal of a slowdown in global economic growth.
And US futures as well, they have been trading just about flattish. Data to watch includes earnings from Cisco, and after a deluge of weak data from several countries last week, top priorities dismal Chinese trade figures, investors will be eyeing July US retail sales and consumer prices, as well as the Eurozone second quarter GDP reading on Tuesday, which is expected to show a contraction.
Let's connect with Zahid Mahmood, senior dealer at London Capital Spreads, who joins us live now. Zahid, good afternoon to you. Thank you for joining us. Zahid, much of the regulatory action is now behind us. If I look at the core earnings which have come out from big US companies, they also are subpar. So despite a very dismal economic environment, the global markets are still holding on.
Yes, good afternoon. Firstly, you are correct, but I think the principal reason the markets seem to be staying where they are at the moment is anticipation of further central bank action from a number of key central banks around the world. We are, for example, expecting action out of the US Fed, the European Central Bank, the Bank of England, and even the Bank of Japan are possibly hinted as helping to stimulate the economy. Now, I think the reason that the markets haven't sold off more aggressively so far is simply because they're waiting to see what the central banks do before deciding.
Zahid, we are also slated to see the Eurozone GDP figures, which are slated to come out tomorrow and expected to show a contraction. Do you think a slowing growth trajectory is something that equities at least have priced in?
Not at the moment. Not at the moment. And the very reason is, again, as I mentioned, it's because the markets, in my opinion, the equity markets in particular, seem to be overvalued relative to how the economies on the whole seem to be performing. As you mentioned, there does seem to be slowing down around the globe across many countries, but equities seem to be holding up for the very reason that it's being held up by anticipated action rather than by key fundamentals that is being displayed by economic data of many countries right now.
Sir, the next Fed meeting is still at least a month away, which is 16th of September. Till 16th of September at global level, do you think risk on trade, which has fueled us so far in the early part of August, do you think that is here to stay?
Sorry, could you repeat the question? I didn't understand.
No, what I'm trying to understand from you is that the next Fed meeting is only due on 16th of September. Do you think till 16th of September, the general mood which is leaning more towards risk on trade, do you think that mood will remain intact?
That's a tricky question. The reason is there's other economic data and political news at the moment that could certainly influence decisions before then. We have to bear in mind that Greece, for example, is coming up to an audit in September as well, and many people are now pricing in the fact that Greece could even leave the Eurozone. If you get sudden shocks like that impacting the financial system, then anything could really happen. I think at the moment, people are really in a situation wait and see, but it isn't principally because of what the US Fed will do. There's other economic and political things going on in the background right now, which could certainly give a shock to the system that isn't currently being anticipated.
Okay, Zahid, good chatting with you. Thanks for taking time out. Let's also shift focus to what the commodity markets are up to. Let's bring in Manisha to give us a snapshot. Manisha, afternoon.
Afternoon, Aisha. Thank you so much for that. Well, after a previous strong week, we have seen a bit of a declines coming in right now. Asia started positive today. Can't say the same about Europe. So while the crude prices were holding around $93.5 per barrel kind of a level, it's reached below 93 at this point in time. Still positive, but people seem to be taking profit in many of these industrial commodities. Same has been the case with copper prices. We started Asia with nearly 1% of gains. It's not holding in the same strength at this point in time. The second quarter GDP numbers from Japan have been much weaker in sense what you saw in the first quarter, and that really seems to have taken some amount of risk appetite from the markets. The gold prices were trading around 1625 and Asia started just about holding 1620 right now, and the silver prices have turned into negative. What the markets are now watching out for is the Greece and Spain GDP numbers, also the Germany WPI numbers. Much of these numbers coming in from the Eurozone would give you further direction.
All right, Manisha, thanks for that. Let's connect with Devang Visaria to discuss some commodity strategies. Devang, good afternoon to you. Thank you for joining us. Let's start with your outlook on silver.
MCX silver has been trading in a very tight range of 52,300 and 54,300 levels for the past 5 weeks, and mind you, this is very uncanny of silver to trade in such a very tight range. The daily charts seem to indicate that there is a build-up of fresh momentum on the upside. Our strategy over here is to initiate long positions above 53,735 levels, and first upside target is 54,300 levels, followed by a second target of 54,700 levels. Protective stop loss of 53,374 is a must on all the long positions.
Devang, what about base metals like copper?
MCX copper can currently trading around 414, 413 kind of levels. The daily charts seem to indicate the formation of a bearish head and shoulders pattern on the daily charts. This is an indication of impending weakness on the price trend, and we expect prices to decline from these levels. Our first downside target for copper is placed at 408 levels, followed by lower